Good morning, investors. The US market is opening today, September 3rd, 2025, with a notably bearish tone. Persistently high inflation, evidenced by recent CPI and PPI figures, continues to be a major headwind, keeping the Federal Reserve on a cautious path despite robust GDP growth and a strong labor market. This has put downward pressure across major indices, signaling increased risk aversion. Today's session will likely be influenced by ongoing concerns about future monetary policy and potential for a growth slowdown. Key levels to watch on the S&P 500 include immediate support at 5,100 and resistance at 5,200 as the market navigates these macro crosscurrents. Delving into the economics. Inflation remains a dominant theme, with CPI slightly up and PPI jumping significantly to 3.3%, indicating persistent cost pressures. Despite this, the economy showed resilience with robust GDP growth of 3.3% and non-farm payrolls exceeding expectations at 73,000, although the unemployment rate ticked up slightly to 4.2%. The Federal Reserve held interest rates steady at 4.5%. This mixed economic picture, characterized by strong growth but stubborn inflation, fosters a bearish outlook for equity markets. Persistent inflation signals could lead to a more hawkish Fed stance, impacting corporate earnings and valuations, particularly for growth sectors like digital payments, reinforcing a cautious market bias. The S&P 500 chart reflects bearish sentiment. The index has broken down from key support, establishing a clear downward trend from late August, trading below its short-term moving averages. Momentum indicators like MACD are firmly bearish, showing negative divergence. Volume has been somewhat elevated during declines, suggesting seller conviction. The index is currently testing significant support around 5,120. A breach could open the door for further downside toward 5,050. Resistance now sits at the 5,180 level. The Dow Jones Industrial Average also shows a declining trend under consistent selling pressure, pushing it below its key moving averages. The 38,000 level is acting as a pivot point, with the index struggling to hold above it. Technical indicators confirm the bearish momentum, with RSI firmly below 50. This move suggests a technical breakdown from a recent range, indicating the path of least resistance remains to the downside. Initial support is seen around 37,600, with resistance at 38,200. The Nasdaq Composite is experiencing a notably steeper downtrend, highlighting growth and technology stocks' vulnerability in this high inflation environment. Significant selling pressure has pushed it well below crucial moving averages. Momentum indicators are deeply bearish, with RSI approaching oversold conditions, but lacking strong immediate reversal signs. The chart shows lower highs and lower lows, pointing to continued technical weakness. Key resistance now stands near 18,200, with potential support levels to watch around the 17,700 mark if selling pressure persists. The CBOE Volatility Index, or VIX, has seen a notable increase, rising above the 20 mark. This signals a shift towards greater investor fear and uncertainty. A VIX reading above 20 typically indicates a risk-off environment, where investors seek hedges against potential market declines. The rise in implied volatility across equity options suggests traders are bracing for larger price swings, a natural reaction to ongoing inflation concerns and the Fed's cautious stance. This elevated VIX supports our bearish outlook, indicating sustained market unease.
Turning to Circle Internet Group Incorporated, CRCL, the 4-hour chart reveals a predominant strong downtrend, trading well below its 20-period Bollinger Band midline at 129.22. The current price of 118.58 shows a slight bounce from the lower Bollinger Band at 116.60. While the RSI at 32.32 and stochastic oscillator are deeply oversold, hinting at a potential short-term relief bounce, The overall MACD remains bearish. Volume has been moderate. Key resistance is around 120 to 122, with immediate support near 116.60. A sustained break above 125 would be needed to invalidate the near-term bearish bias. Finally, recent news highlights significant options activity on CRCL by market whales. This indicates large institutional investors are taking substantial positions, signaling expectations for considerable price movement. Given CRCL's current technical weakness and oversold conditions, these options bets could be speculative plays on either further breakdown or a short-term rebound. This activity underscores heightened volatility. Investors should monitor upcoming corporate announcements and broader crypto market trends for next catalysts. In the near term, CRCL's price action is likely to remain highly volatile, with a bearish undertone, but potential for sharp, options-driven swings. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.